Hey, I think this is recording now. Yeah, this is Prof. Hamilton. Just want to take you through this tax planning site that I developed, and it applies for your most recent exam. So there's other, I talked about the Tax Act calculator online, and I think it's very good. But this one is one I developed, so I have a little special place for it in my heart. So let me run through how, it's meant to be self-explanatory. There's always, of course, things um, that I think are make sense that other people wouldn't know about. So I want to just point out a few things. So first of all, it starts off with kind of a pure guess that this is a 40-year-old single person. So you could look at a single person, but usually more interesting cases are someone that's married and or has children. So again, it makes some assumptions here. You can change these. We'll go ahead and add a couple children, and their exact age, does matter in some cases for the child tax credit, for example. All right, and so again, they may be a son or daughter, could be a grandchild, could be a younger sibling, could be an elderly parent living with them. We'll just keep it a little more traditional here. Mom, dad, two kids. The income, again, you can set this, first of all, for one of the spouses, if it's a married couple. And again, I've gone ahead and assumed 30,000, but we'll just make it 50,000. And they may have other types of income. More so if it was an older person, they might have Social Security. There could be military pay. So just enter those. I wouldn't recommend changing all of them from 0 to something positive, but you may want to. And likewise, you can do that for the spouse. Here to the right, you see this, again, to take a step back. This looks at calendar year 2017 primarily, and this was really focused around the Trump tax cuts, what it would look like in 2018 for the exact same family, which again is what we're trying to get at. Just a little bit of explanation. Some of this, of course, is in the notes, not from this app, but how taxes work. So they start with 50,000 of income. They get a standard deduction of 12,700. That's money untaxed. Each family member gets $4,050 and additionally untaxed. So taxable income is just over 21,000, not their total income. You apply then what used to be the 10% bracket and then the 15% bracket. That's all done for you. And then you have some tax credits which offset that. So for this family, they would only have to pay $106 for the year to live in the greatest country in the world. So there's a few more details here. If we go to tax savings, I usually keep taxes withheld at 0. If you were interested in actual refund, then you would just, well, maybe they paid $1,000, so they would get about $900 back. But I usually leave that just at 0. There are some adjustments to income, especially if they are self-employed or if they moved, you paid alimony. So again, I typically don't change those, but in practice, often people might have 1 or 2 of those. Tax deductions. This is, again, probably most of you have done or seen your own taxes, and at least you know about itemizing deductions. So it has to be more than 12,700. So we'll just say maybe they have a really big mortgage, and they have a house, and they have a lot of property tax on, okay, and they're pretty charitable. Okay. So in that case, you can see now their itemized deductions instead of the standard deduction is $20,000. So now their taxable income is only $13,800, and they would actually get paid $746 to live in America. One other drop down is tax credits. You can see where they've already got, for a child, they've got one, or for two children, $1,000 each. Once you add in these two categories, they get a small amount of the earned income tax credit because they're modest income. There's other things. I'll just point out one of these in particular. They had young children, but you could change if you wanted to have, you had college-age children, or yourself were in college as the parent, you could enter that amount. And so one quick thought, you could do this for your current situation. Most of you probably have some pretty interesting family dynamics, and I'd be interested to see how it comes out for you. Also, you may look what you're going to be like in 10 or 20 years from now. So whether that's with an addition of kids or with kids moving out of the home, that would be of interest. Okay, to the summary. All right, go to 1040 summary. So this gives you basically what were on the previous slides. Let's also go to tax credit summary. Okay. So here is some of the key things if you have children, if you're paying for education, if you have some kind of green energy type thing. Those are three of the biggest things. Others are the EITC can be pretty large. Here it's not that much for this couple because they made $50,000. They were on the upper end of what's considered kind of modest income. And again, we didn't have the education credit denoted. So last thing here is, yes, this comparison. So if you can compare these 2 years, and this is done all automatically, now you get automatically you get a couple gets a standard deduction of $24,000. So it doesn't matter how much they gave to charity or if they had a mortgage, because it doesn't surpass that. It used to be about half that size the previous year. Part of the offset, though, is you don't get personal exemptions anymore. So the taxable income is different, but it kind of is up and down. Okay. In the end, their tax liability, again, the tax credits, part of this isn't broken out, but the child tax credit went from $1,000 to $2,000, so some of that's explained up here. So in the end, instead of paying or getting paid $746 to live in America, they get paid, again, kind of strange to say, $1,550. If you change this, and you can go back and change things, it'll be updated. I'll go to what I want it here. I'll go ahead. Okay. Suppose it was $150,000. Okay. Now, yeah, you're gonna pay taxes if you're making well into six figures, and then the summary, just to jump back there, but under 2017 tax code, it was almost $20,000. In 2018, this hypothetical family would be paying less than $16,000. That's just in federal income taxes. This doesn't account for state taxes or Social Security taxes or Medicare or property taxes. So anyway, I just wanted to run through that to show you they're not meant to be hidden, but sometimes people don't think about, well, which one of these is necessary. This is key. This is key, and then the other ones I showed you previously to set up the family. So anyway, hopefully that's of use. I'll look forward to seeing your own results.